Hey everybody, it's Larry Berman here, coming to you live from Denny's in Fredonia, New York. Free plug there. I'm on my way back from Florida, back for the season. Well, actually, I got a little bit more vacation time in front of me in March, but we'll be back in the BNN studios on Monday for another live update. Markets this week continue to confound me. We saw front page, I think, of The Economist this week. Basically, this is one of the most hated rallies that we've seen in a long time. And, I'm in that camp of hating the rally on valuation. Bad news this week was good news, and good news this week was good news, and the market just keeps grinding and grinding and grinding. There's an old phrase that the markets, end on pessimism, and bull markets or bull markets are born on pessimism. Tops are just, you just can't time them. Bottoms are an event, a capitulation, the emotion, you can see it in the volume, and tops are just grinding, rotation. So there's a lot of that going on under the surface. Let's take a dive into the chart room and see what we learned this week. The economic calendar on Friday, we saw a slight uptick in the global manufacturing PMI. Slight positive there. However, when we look at the UMich sentiment, sloppy numbers, inflation outlook still elevated relative to Fed targets. When you look down into the ISM, we see weakness. So the market looked at that weakness, and we caught a bid. You had Fed's Waller out Friday morning talking about the Fed moving the balance sheet around and buying the short end. And anyways, that triggered a little bit of rally in the rates markets. The long end rallied, and the sensitivity, of course, to stuff out there is pretty high in terms of the higher for longer message and where rates are. Vornado REIT is a company that we're actually short on in our real estate portfolio. So we've got a private equity portfolio that consists of real assets, real estate, infrastructure, and I use this as the hedge on office REITs. And so when you look at the chart of Vornado REIT coming off the highs from 2021, as Fed started raising interest rates, the pressure on the office REIT sector. So Vornado REIT is basically New York office, grade A space. It's always going to be a winner, but lots of stress coming. We saw this week that CPPIB sold a building in New York for $1. Didn't dig down into the details of that, but to me, the rate sensitivity of the office sector, it needs rates to come down, and the economy is just too strong in certain areas on consumption and being fully employed. We're not likely to see that. In the last few months, we've seen the rotation down. I think the chart here setting up to break to the downside, below 20, below 1750, below 15, I think, look out 5 or 10 years and this is a bargain. But for now, it's acting as my hedge in the portfolio. So I look at this and see the behavior of names like this that are heavily shorted and how they're behaving. So let's have a peek here. Goldman Sachs puts together an index, and it's the rolling most shorted basket. So you see GS most shorted rolling, if you can read the title here. And that's the white line. So earlier this year, we saw the shorts go down, and very recently, you've seen the squeeze on the short side. When we look at the small cap area, Russell 2000, more junky, a lot of companies that don't make money, up a little bit here. But when we see the higher quality small caps, S&P 600, you still see that, they're down on the year as of late Friday trading, where, of course, the NASDAQ is leading the charge. The equal weight S&P 500 is broadening out a little bit, so that's a positive. Make no mistake about that. But all that recent relative gain has literally been in the last few weeks in February. So, positive. What is it that's going to trigger me to turn bullish here? Obviously, the market is priced for this soft landing, and I just can't believe we get through this cycle without a hard landing, given what the Fed has had to do. Anyways, market doesn't believe it. I'm in the vast minority here, I think, in terms of looking at valuation, being very concerned. Meanwhile, the market's ripping up to the upside, and who knows where it's going to stop. But, caution, unless you're a short-term day trader looking for momentum, you just got to be cautious. I do like private credit and private equity. What I did for my own portfolios and for my wife's, who's very, very risk conscious, we liquidated today all our equity holdings, and I put them into private equity and private credit markets that, for me, is going to get a very stable return over the next year or two as we wait for valuations in the public markets to get more attractive. Remember, Warren Buffett's got all that cash because he does not see a lot of opportunity. All I see when I look at the charts is a lot of speculation. Have a great week, everyone.